What's going on, guys? Marc Guberti here. In this video, we're going to talk about 5 investing habits you need to develop now for long-term success. And investing is a long-term game. You can see some gains right away, depending on when you invest, but the big gains happen over the long term. So there is definitely going to be a lot of patience in mind, but these habits will help you to have that right investment strategy. So the first habit you want to develop is just get a better idea of what you want. There are a lot of people who just have a very vague idea of what they want with their investing strategy, and that could lead them to making some poor decisions. So you want to think, what specifically do you want? Some people, they want the appreciation. That is what they value the most. Other people, they value the income the most. So they will value the dividend. They will value the rental property income versus if you're in the game of appreciation and you could afford to not have dividend come in, then a stock like Amazon makes more sense for you. So get clear on what you want as an investor and always keep that in mind. The second investing habit is to get clear also on your criteria. So it's just one step to get clear on whether you're more appreciation focused or you're as in growth, or you're more focused on something like the income, the dividend. But now we get a little deeper into that. And the deeper you go with your investing strategy, the better. The deeper you go, the easier it is for you to sleep at night because you actually know what you truly invested in. So there are a lot of things to look at. For real estate, you want to look at location. You want to look at the type of property. Some people, they like to buy a property that's a little beat up but doesn't require too much work to fix. Other people like something that doesn't really have that much hassle. You buy it, you immediately put someone in it. In stocks, it goes anything from what sector. So tech is a sector that I certainly like because I just know the most about the tech in general. And also, what size is the company? So some people, they will go for a mid cap, which is anywhere from 2 billion to 10 billion in value. Other people will go for the larger companies that have $100 billion plus valuations because those companies are less likely to tank. While with a mid-cap play, you are certainly hoping for a lot more growth. It is easier to double, triple, quadruple if you are a mid-cap, just because if you're Amazon, Apple, Microsoft, you're $1 trillion company, to double, you'd have to reach around 3 trillion based on where they are at. But if you invest in a company that has a $5 billion market cap, then it's not as hard to double. You got to go from 5 billion to 10 billion in market cap, which these are certainly big numbers to the common person. But when it comes to how much a stock can appreciate, you're only asking for a $5 billion jump in some cases instead of a $1.5 trillion jump for the company to double for you. So think about like what general area do you want to pursue? Like what are your general goals? And then what are the types of assets that you want to invest in that help you with your goals, but also they give you a better chance of sleeping at night. Like if you don't know anything about Bitcoin and you're just investing in it because you heard it produced an ROI for a whole bunch of people in 2017, then it's going to be harder to sleep on that asset because you don't really know the fundamentals as much versus if you do know more about your investment asset. The third investing habit for long-term success is to invest a minimum amount each month into your investments. So whether it's stocks or real estate, and you can do REITs, REITs, if you want to invest in real estate each month and maybe you don't have the money to buy a whole property. REITs are pretty much real estate companies that are on the stock market. They're on the stock exchange and they do pay out nice dividends. So that's just an option I wanted to throw out there for real estate investors. but you want to get clear on a set amount each month that you are going to invest with. And ideally, you want to raise this amount. So if you start at $1,000 per month, you want to raise that to $1,500 a month, $2,000 a month. You want to set those goals as to how you're going to raise that money. And then that inspires you to make more money. One of the reasons that people feel stuck with their investing or their income is because there's not a strong why to continue to grow. And if you set the goal of, I want to go from $1,000 to $1,500 within the next 2 months, that definitely speeds up the process of boosting your income. It gives you motivation. It gives you a reason to pursue that extra side hustle or ask for the raise or do what you have to do so that you're able to go from a $1,000 monthly contribution to a $1,500 per month contribution. The more money you invest each month, the better. And the reason you want to do each month is because of dollar cost averaging. So timing the market, it's not really a great strategy. I know there are day traders out there, unless that is your profession and you are making a full-time income from day trading. I don't recommend it because you're going to be looking at your stock portfolio all day. And if that's not your main source of income, then how are you going to put in $1,000 each month? And day trading, I mean, kind of like Vegas, to be honest, and that's just what it is, because you're just hoping a stock moves a certain way and there's not really as much fundamentals behind it versus if you do buy and hold and you have a long-term strategy. And if you don't know what stocks to invest in yet, or you're not sure about real estate, just buy index funds. That's certainly the easiest way for anyone to get started and earn a return on their investment. So if you invest a set amount each month and make it a point to grow that monthly investment, then your portfolio, your investments are just going to continue to grow over time. The fourth investing habit is to live below your means, because if you spend less money than you have to, then you have more money to invest. There are a lot of people who they make $100,000 each year only to spend $110,000 each year. And maybe they bought too big of a house. Maybe they burned their credit card and they just spend a ton of money there. But there are a lot of people who they have the $100,000 a year revenue income, and they live on the $110,000, $150,000 a year lifestyle. So if you live below your means, it definitely makes money a lot less stressful. The stress really builds up with money if you feel like it's paycheck to paycheck, or if you feel like you're on a razor thin margin. So you can really make a lot of effort in changing your lifestyle if you feel like that's you, so that you are able to expand on that margin of safety. There is the concept of margin of safety with stock investments, where if you feel like the intrinsic value of the stock is $25 and you buy a stock at, let's say, $15, that same stock, there's a lot of margin there. But if you don't have that same outlook with your life, with your finances, then that's going to hurt your ability to put in those monthly investments that will grow your portfolio over time. And the fifth investing habit for long-term success is to continue to surround yourself with the right people and build up your knowledge. And YouTube videos like this one are great. And it is great when you do gently tap the like button for all the support that it helps with. But you want to surround yourself with investors. You want to do this in real life through Facebook groups where you are able to engage. And we can definitely engage in the comments, but I would make it a point to put yourself around more people who have similar investing goals as you, who are similarly minded, because you become the average of the 5 people you spend most of your time with. And if you don't believe me, then look at how you're utilizing your money right now. What's your current financial situation? And then think about the 5 people you spend most of your time with. The reason that a lot of people who are super successful hang out with other super successful people is because they all raise each other up and they understand the value of this principle. So you can know all the concepts, you can know all the how to, but if you are surrounded by the wrong people, it's going to really decrease the likelihood that you take action on this stuff and you do build up your portfolio. So make sure you are surrounding yourself with the right people who have similarly minded goals and ambitions as you. And if you guys did enjoy this video, make sure you subscribe. We do a lot of videos just like this one. And also gently tap the like button if you have not already. Signing off, dream big, achieve greatness, unlock your potential today.